What is up, everyone, and welcome to another Bitcoin market update. In these videos, you will learn how to use technical analysis to forecast price movements in your favorite cryptocurrencies like Bitcoin and others. So let's dive into it here with Bitcoin on the weekly time frame, but just wanted to quickly note everything on this channel is for educational purposes only and is not intended as financial advice. All right, so starting off on the weekly time frame here, we can see that so far this week we had kind of an upper wick here, and right now we're operating right about where the open was. You can see that we're literally at exactly where the open was, at 0% change for the day. So what I've been talking about on this weekly time frame is really anticipatory in nature, as I'm waiting for us to form a high so we come down and have a buying opportunity into where the potential higher low is going to be set. And the reason why we think that a higher low is going to be set is because of the magnitude of the move. It's very likely, given that we've risen at this point from our July 19th low up about 73% since that low has been set. And so for us to go down and draw all the way down, if we were to start drawing down and go to a new lower low, we would have to draw all the way down until we get to over 43% drawdown. Now it's possible, I mean, you see it here, it is possible, but this is a liquidity event. This is where a bunch of people were getting liquidated because they were all leveraged long up here and then, got liquidated on the way down. This is a different scenario. And so I think we will set a higher low if we do come down, and then I'll be looking to position into a good spot position if we do end up coming down and forming that higher low, or when we do. Eventually we will. We've risen for the past 6 weeks now. So at this point, this is the 6th week, so we'll see how that ends up going. But for right now, I would say that it's looking really good in terms of the weekly time frame, but we are waiting to see when is that weekly high going to be set. And right now, we're kind of lined up right at the bottom of these two candles, right where we had this weekly bounce right here. So it wouldn't shock me if we had a rejection from this level and this is where we set our high. The reason is because of this key low right here. And so that's something I'm keeping an eye on. If we go down to the 3-day time frame, we can see that we got a nice strong candle close above the key high here from August 14th to try and continue our bull trend here. So you can see very clearly we have a low here, high, higher low, and now we have a higher high. Now the question is, are we going to be able to close this second 3-day candle after this one above this key high as well? If we do, this black candle will end up being a support zone for price. But what could happen is we close above it, and then we may push right through it without even respecting it as support, because we're so close to the support zone already, and we're running into some resistance as well. So from a 3-day perspective, you can see we still have our resistance level here, the gray zone, that I said it's likely we will have 2 rejections from versus just 1. And the reason is because this is a higher time frame level. 3-day support or resistance level typically holds for more than just one test. But we don't know that for sure until we actually see that. But you can see this is from our bull trend here. We have a low, high, higher low, higher high. 2 candle closes above the key high. This is the last down candle before that up move. And so therefore, this is the area where now that people see the trend has continued to be bullish here, they're saying, okay, if we come back to this zone where I sold, I'm going to buy it back. And that's what happened right here. We get this bounce, we go to all-time high, we come back into it, we get another bounce, and then when we test it the 3rd time, we push through it because there wasn't enough buyers here. So now once we close below it, it turns into resistance. People here go short. You see the price go down somewhat, and then we had a very quick recovery, and we're back right on the horse here with rising more in price. So I'm interested to see how is Bitcoin going to handle this red resistance zone, which is actually on the 1-day time frame. So if we go to the 1-day time frame, I'm just going to grab my blue box here and pull that over because that's our support level we're going to watch. So if we look at this from a single day perspective, we can see that this red resistance level is our main resistance level. We had one rejection off of it here, We rose into it, we had a rejection, and now we're coming into it a second time. Now the question is, with the second time coming into it, right now you can see the very long upper wick of profit taking, signifying, a potential for a high being set here after today's daily close. But it's really going to depend on where this daily close is, and then also, in addition to where that daily close is, what sort of follow through do we see throughout the rest of this week. So right now, this red resistance zone is what's suppressing price, and you can see that by this long upper wick here. Now, something else I wanted to note on a couple things I wanted to note on the single day time frame is this RSI. So if we look at the price action, we can very clearly see we're making higher highs on this rise in price. Price is going higher, and we're making higher highs. Okay? But if we look at the RSI, we're not making higher highs, we're making lower highs. And this is a consistent bearish divergence. And so what this is telling us is with each stab up in price, we're getting weaker than we were on the previous stab up. So right now you can see, if we look at today's daily candle, for instance, right now we're at 67.85 RSI. The previous high was at 69. So if we don't go above that and we start to draw down on the daily time frame, let's say tomorrow, that'll confirm this as a bearish divergence again. I mean, we've already confirmed it multiple times here. So, every time we start to draw down, it's a confirmed bearish divergence. But you can see that it hasn't really made much of a difference. We get a bearish divergence, but then we get a quick recovery. We get a drawdown, quick recovery, drawdown, quick recovery. And we just keep doing that all the way up. Eventually, though, it's not going to go that way because the weekly time frame needs that high to be set, and then we need to come down and form that higher low. So this might be the scenario where that happens, and something that I'm keeping an eye on is where today's daily candle closes, and then in relation to that, how does tomorrow's price action play out after we get something like this long upper wick, the bearish divergence in the RSI, and then potentially some bear volume here as well. If we don't close this as a bullish candle, and we close this as a bearish volume candle, then that just adds more confluence to a potential drawdown thereafter. So let's say that we do draw down. Where do I expect the price to draw down to? So if we look at this from a weekly perspective real quick, we can see that the previous weekly low is at 43,808. So if we go to the daily time frame, 43,808 is right here. It's right below this low. So if we pull up our super guppy indicator, we can see that that's right in this range of green EMAs. And this is where I'm going to be looking to bid on Bitcoin. And the reason is because this indicator is a collection of exponential moving averages. These are the longer term ones, and they take a while to roll over to be green. And they only do that when the trend has been established for quite some time. You can see how long it took us to go from bear trend into this bull trend. It took a long period of time. And even when we went above them on July 26th, that was still, until they turned green, that was still 24 days. So it takes a while for this indicator to work its way out to be in this position. But once it is, typically the green EMAs offer pretty good support. So that's going to be an area that I'm looking to go long in if we do end up getting down into that zone over the coming days and weeks. If we look at this on the lower time frames, if we go to the 12-hour, we can see that the trade that I discussed yesterday, that I took this long right here, right off of this gray support level, panned out very nicely over the next 12 hours. So you can see that very simply what happened here was we had a bear trend. We had a high, low. Here, I'll pull this over so you can see a little bit easier here. So we have a high, low, lower high, and then lower low right here. 2 candle closes below the key low right here. So that makes this an established bear trend, and it also makes the last up candle before this down move our resistance level to keep an eye on. And so if we take our rectangle and we attach it to that, which is what I did here, you can see that we didn't come up. We came up right here, but we didn't actually touch it. And then we came down again, and then we came into it here. It looked like we were going to get a rejection with this longer upper wick. and the declining bull volume. But then the next volume, or the next candle, just opened up and just completely obliterated this support resistance level and closed right above it. And then once for support and resistance levels, my criteria is I'm always looking for 2 candle closes above or below a level to establish it as support or resistance. And so in this case, the one candle wasn't good enough. I had to wait for the next candle. But once this candle closed, then I said, okay, now this is a support level. So I'm going to put a bid on the top of this wick where the support level is. And then you can see price barely wicked into that, about $10 into it. And then we had this nice little trade right here. So from top to bottom, it was about a 5.2% trade on spot. And then if you're in a country where you can use leverage, obviously it's a bit more. So it's very simple, kind of trading criteria when you're looking for support or resistance. You're looking for a trend to be established, and then once you see that trend, you're looking for that support or resistance level within the trend, and then you can establish how you want to go about playing that support or resistance level and look for confluence around that trade as well, using things like technical indicators and other things like candlestick analysis and volume analysis and other things like that. So now this is a support zone for price. This is really the main support zone if we do end up drawing down. The question is, are we going to bounce off of this twice, or are we going to just go through this after we've tested it once as support here? I'm not exactly sure what's going to happen in terms of if we're going to go right through it, if we're going to bounce off it again, but I have already sold out of my position on this rise in price. So at this point, it's neither here nor there for me if we go through it or we don't go through it. Doesn't really matter too much to me, but I would say I would venture more on the side of us bouncing off of it at least one more time, just because it's a 12-hour level. It's a little bit higher time frame level, and so we could end up seeing that bounce. If we look at this from a 4-hour perspective, we can see that we have this drawdown occurring right now. If we look at this from an RSI perspective, you can see once again that bearish divergence here at the high and then the lower highs here, but clearly we're making higher highs in price. We have declining bear volume, so we could end up seeing a bounce here over, going into this daily close. We have 3.5 hours left, so we'll see how that ends up panning out. The other thing I wanted to quickly note was the Ichimoku Cloud, which is in the most bullish scenario it can be in. You can see that back here when we flipped to be in this position right about here on this candle, you can see that trend played out very nicely here for a nice rise in price. If we're using this as a guide, we say, okay, we're going long as soon as we're in the most bullish scenario for this indicator. You can see that it didn't take very long for us to go up and go for about 6.75%. But if you held, you go up to 10%, and then chops around a bit, and then ultimately they cross. This is when you'd exit the trade. So where did we enter? I mean, you want to take profits on the way up. So let's say we entered here, we'd take profits up here. If we didn't take profits, we're closing the trade right here. So we wouldn't have made much money. So that's why you take profits. But now we got to recross above the cloud. So the blue line crossed below, the Tenkin crossed below the Kijun, the red line, and then we crossed back above it right here. So once we cross back above it, what that tells us then is now we're in a bullish scenario. And so we are saying we're in a good trend here. You go long right here, and then you can see that that has a potential for 3.67% profit, but we're still in the most bullish scenario. So this could continue, and one of the ways that you can play something like this is with a Kijun bid. So you can wait for the Kijun, which is the red line, for price to return to that, and if it does return to that, that's where you bid, and then you wait for a subsequent bounce. So that is Bitcoin in a nutshell, folks. If you like this video, give it a like down below and subscribe for future educational content around cryptocurrency and blockchain technology. And if you haven't already, check out our beginner technical analysis course that we released on Leutheria.com. This is where you can learn all the foundational elements of technical analysis to get started trading these crypto assets with precision and accuracy. So check that out and get 20% off using the link in the description below. And I'll see you guys all tomorrow. Until then, onward and upward.